Hello everyone and welcome to IBA's marketing presentation. And my name is Zhou. I'm a senior aviation analyst in IBA's commercial aviation valuation department. In today's presentation, I will go through previous economic downsides in order to have a better understanding of how current COVID-19 will shape our industry and what we can expect for the near future. A quick reminder before we start that we provide a range of data intelligence products and professional services to support the industry, which we have been doing through the aviation cycle for 33 years, from our InsightIQ data products, valuations, advisory, and analytics through to the technical and asset management side. In particular, I want to mention InsightIQ, our market-leading intelligent platform. Our data stem from over 65 years of proprietary data, which we combine with third-party resources and our award-winning valuation to create a leading aviation data platform. We continue to innovate and combine more data, news, analysis, and insights with technology to provide clarity and solutions to meet your company's ambitions. We have recently added more macroeconomic data and events, historical values, and trends to the platform. I'm delighted to announce the launch of our new InsightIQ carbon emission calculator. Our calculator is the first of its kind and integrates IBA's independent proprietary fuel burn assessments with real-world flights and our fleet data. Designed for airlines and aviation finance, IBA CEC is the only carbon modeling tool currently available that enables the user to calculate and compare the emissions of airlines and lessors, entire aircraft fleets and regions over different periods of time. In addition, our CEC supports analysis of specific commercial aircraft models and routes. And details of how to sign up for a system demo or more information are available on our website. So now we go into the main topic. So it has been over a year since the outbreak of the COVID-19 pandemic, as well as the first wave of global lockdown. Up until now, we are continuously facing new challenges, and there have been a widespread concern that the situation will probably get worse before it becomes better. The expectation for 2021 remains to be seen. But like previous downturns, there will be winners and losers in this industry as we're going through this pandemic, and the true extent of the impact is hard to gauge. Therefore, IB would like to share this market video update to highlight the COVID influences on several key market indicators in the aviation sector. And by comparing the previous economic downturns, we will have better understanding of what true underlying impact of the COVID that will bring to this industry. If we look back in the past 20 years, there are noticeably 3 economic downturns by outlining the GDP growth. The first crisis stemming from 9/11 in 2001, and 2 years after, later in 2003, the SARS started to spread, but it mainly concentrated in Asia-Pacific region. Since the 2 events were next to each other, so we combined them into one event. This was then followed by the global financial crisis due to subprime in 2008 and 2009. And right now, we are in the 3rd economic downturn triggered by the COVID-19. So both global financial crisis and the current COVID-19 pandemic has been falling into economic recessions in which the GDP growth became negative. And if we import the net orders in those years by using IBA's InsightIQ data, we can now see a graph with a close correlation between the number of net orders and the global GDP growth. So the number of net orders plunged during all 3 events. Also in this chart, I have highlighted 2 shaded areas, which are the development period after each crisis. In each, the annual net orders have rebounded quickly after the 2 economic downsides, and the second rebound was even more significant. This was mainly driven by the Asia-Pacific region, which we'll take a deeper look in the next slide, and especially in China, where a number of new lessors were burgeoning since the global financial crisis in late 2010s. However, the severity and the longevity of the COVID-19 impact will be more substantial than any of the previous crises we have ever observed. And the total net orders in 2020 only accounts for around 40% of those received in 2019, which was already a bad year for Boeing due to its max grounding. Looking ahead, we would expect this trend to remain for another couple of years before the order demand start to come back from around 2023 to 2024. So now if we convert the absolute number, order number from previous chart into market share percentage from each aircraft class within the same period, at the same time we replace the GDP growth with the historical fuel price. Since the fuel price started to shoot up right after each crisis, and we can clearly define the two development periods highlighted in bright color there on the chart. The main message from this figure at the top is when the fuel prices start to surge, the airlines and the lessors are more willing to place more aircraft orders, the new aircraft orders. During the first development phase, starting from 2004, fuel prices quickly climbed up, and we have seen substantial number of new aircraft being ordered. And the bottom left pie chart illustrated the order composition in terms of the aircraft family during that period. In terms of order types, the Airbus A320ceo and the Boeing 737NG aircraft accounted for majority of the total orders. By saying that, wide-body have also attracted a large number of new orders at the same period, such as the Boeing 787 wide-body family, mainly the Dash 8 followed by the Dash 9 model. Also the 777-300ER, as well as the Airbus A330ceo family. In contrast, the orders are more heavily weighted towards the narrow-body aircraft during the second development phase after the global financial crisis, starting from 2011 to 2018 and 2019. There have been a headwind for the current generation aircraft, and it's more leaned towards the newer generation aircraft types, such as Airbus A320neo and the Boeing 737 MAX family. But again, the Boeing 787 wide-body family is still the most wanted wide-body aircraft type, followed by the Airbus A350 family, which received its first batch of order around 2006 and 07, which is just before the global financial crisis. And so far, it has obtained over 900 orders. Going forward, we still expect orders from Boeing to trail behind Airbus in the near term. Although MAX aircraft has been progressively taken to the skies, and it will certainly take huge efforts from Boeing to catch up the A320neo family. Within the wide-body sector, Boeing 777X have confirmed a few hundred orders despite some uncertainties from its existing customers, due to its several delays with regard to its GE9X engine, which is a bit of technical problems. Latest update from Boeing is that the first delivery of the 777X aircraft is expected by the end of 2023. And in the regional market, Embraer remains the predominant player in the field, but due to the enforced scope clause in the US region, the E2 orders have been mainly driven by its larger variants, which are the E190E2 and the E195E2. In terms of a turboprop, ATR has grown its short takeoff version on its ATR-42-600 aircraft model, and the introduction of the same version on its larger variant, the ATR-72-600 model, won't be too far away. With regard to the regional distribution of the net orders received in the last few decades, we are able to present another graph which has been based on the InsightIQ as well. Since the early 2000s, the order from North America have been overtaken by European and Asia-Pacific regions. Probably we could argue the market in North America has been more sensitive to the economic downturns. And another suggestion would be the market in that region had been well developed already, and the market saturation was relatively higher compared to the others. Another feature we can take from this chart is that the order from Europe had more resilience and consistency throughout the economic cycle. More orders in the order replacement will come from both European and the North America region, as the retirements observed in the past decade have been quite substantial from those two regions, with North America taking up over half of the overall retirements in the past 4 years, and the European representing around 25% to 30%. Also, more orders have been observed from Middle East, especially since the global financial crisis, mainly concentrated on the wide-body orders. So, moving forward, I would predict the orders from each region will be more closely linked to the OEM in their region. For instance, the airlines in North America will be more willing to take the products from Boeing, like the 737 MAX aircraft and also the wide bodies, 787 and the 777. European market will be more leaning towards the Neo family and the A350 plus the A220 family. Asia Pacific will probably see a combination of both. But in domestic China, we expect more orders from COMAC for their ARJs and the recently developed C919 aircraft, and also the future wide-body, the CR929. The COVID pandemic will inevitably accelerate the retirements of certain aircraft types, especially the long-haul aircraft, such as the Boeing 747-400 aircraft from operators like British Airways, who has retired 16 747-400 in 2020, and another 7 aircraft so far in 2021, followed by Lufthansa and the Qantas. Also, Air France announced the early retirement of its entire A380 fleet due to the low demand in international routes. Also, the remaining A340 fleets and some early built A330ceo family and the Boeing 777 family are also on that list. The acceleration of retirements have also occurred in the narrow-body sector. The remaining MD fleets have been exiting from Delta Airlines, the 737 Classic family, and the more Asian aircraft from 737NG family, also the A320ceo family, as well as the 757 models, which could give rise to the demand in the secondary market when considering the P2F conversion, since the demand for freighters has been thriving during the COVID lockdown due to the high volume in the cargo market, and those types of retirements within the narrow-body and wide-body sectors in recent years will continue that trend in the future, and probably with faster pace. Similarly, for the regional jet, we recently recorded a large number of retirements on the types such as Fokker 70, 100, BAE 146, CRJ 100-200, and the ERJ family, as well as the E170s previously. In the near future, we expect to see more of them, especially the 50-seaters. In terms of turboprop, the DHC 400 and ATR 42 models, also the sub 340 are the main types to be retired, which are more likely to come out of service in the next 5 years. If we take a look at the graphs at the right-hand side of this slide, which indicates the number of retirements for each aircraft class and the corresponding average retirement age for the same period. We have not seen any dramatic growth in the number of retirements so far for all aircraft classes in 2020. But at the same time, there has been a record number of stored aircraft since the COVID outbreak, particularly in the wide-body sector, whose fleet has been massively mothballed. Therefore, to what extent those current stored aircraft will resume the operations in the future remains unknown. In other words, we could anticipate the current high storage ratio would trigger more retirements in the near future, which would behave similarly to the global financial crisis, at which we have seen a time lag about 4 to 5 years before there were a huge number of retirements being recorded. And by referring to the stored aircraft, we are now going to the next slide to take a deeper view. So in this slide, we have prepared 2 charts, which we both generated by using the data from InsightIQ. When we are referring to the parked and stored fleet, so in IBA, we define the parked aircraft which has been grounded for at least over 2 weeks and less than 3 months. And for those grounded for more than 3 months, we consider it as the stored aircraft. So now if we take a look at the top chart, which shows the weighted percentage of parked and stored aircraft from each class, the stored and the parked fleet recorded in 2020 clearly stand out from the crowd. Both narrow-body and wide-body have seen a huge number of aircraft being grounded, especially the wide-body, since the long-haul market have seen severely impacted by the COVID pandemic. In comparison, the storage ratio of regional jets and the turboprops have experiencing some degree of growth, but in much lower level, which could be resulted from the fact that the short-haul market has not been impacted as much as long-haul routes. Also, they have recovered faster, and historically speaking, the storage ratio of regional aircraft has already been consistently higher. So in terms of the travel statistics within the regional jets market, 50% of all passengers worldwide fly less than 500 nautical miles per trip, and 30% of passengers worldwide fly less than 300 nautical miles per trip. Particularly for the turboprop aircraft, most of them are used on point-to-point services between regional airports or between regional airports and big cities. Smaller remote airports can only be served by turboprops because of the short runway lengths and other restrictions. Regional jets are deployed on routes between smaller cities or as hub feeders for major airlines. So far, some of the intracontinental network restart is largely served by the regional jets. Although the number of airline failures was lower than the 2009 figure, the size and the scale of each airline being involved are much more substantial. Therefore, the actual number of aircraft involved in airline failure in 2020 has more than doubled compared to the figure shown in the previous market downsides during the global financial crisis. With that being said, we expect to see more liquidation from airlines, and since the AerCap announced the acquisition of the GCAS portfolio, and also latest acquisition of a flight leasing by the Calais Aviation, potentially there will be more consolidation taking place in 2021 and the year after, which could lead to more airlines mergers and liquidations. In line with the grounded aircraft, we're able to outline the historical current market value of 4 aircraft types from IB's InsightIQ in order to monitor the movements of aircraft values since early 2000s. So if we can focus our attentions first on 2 charts at the top, the Boeing 737-800 and Airbus A320ceo, probably the 2 most iconic aircraft among the current generation narrow-body aircraft types. So in comparison, the storage ratio of A320-200 reached almost 40% and double the rate of the -800. Also, in the past 2 decades, the market value of the Boeing 737-800 have had better and more stable performance than its counterpart. Due to the max grounding in 2019 after 2 crashes they had, the 737-800 have exhibited better value retention than the A320-200, which has been pressurized even more as more A320neo have been delivered into the market recently, despite the reduction in production rate as announced since COVID outbreaks. In terms of a wide body, a further drop in both the 777-300ER and the A330-300 market value are expected as the long-haul travel has still been restricted under the COVID-19, which has significant impact on the wide-body market, especially for the A330 family, which had already been in trouble before the COVID. And those middle-aged and older vintages have experienced a more substantial value haircut during the crisis. On the other hand, the recovery in the active fleet within the 777-300ER models so far in 2021 really indicate the popularity of the demand of the aircraft remain robust. As the entry to service date for the newer Boeing 777X aircraft remain to be seen, we would expect a relatively strong performance for the -300ER at the post-COVID era. The number of annual deliveries have seen a gradual increase since the early 2000s, despite the 2 dips during the 2 previous economic downsides. Both Airbus and Boeing have delivered a record number of new aircraft to their customers in 2018, before the output from Boeing was dented by the max grounding in 2019. Last year in 2020, Airbus had the lowest delivery number in decades, while Boeing only made 85 units, out of which 53 are Boeing 787 families. Going forward, both OEMs will continue to act rationally and manage the supply side in a reasonable fashion. And we certainly expect to see more MAX to be delivered to its customers as more justification have cleared their skies for this type, and more airlines have resumed their MAX active operation. Now the question lies in when the delivery MAX aircraft will reach the 2018 level, or when the MAX aircraft will start its production ramp up. Based upon the current MAX resumption plan from Boeing, we would assume the time will be around 2025 to 2026. With that being said, Airbus is still going to lead delivery chart for the time being, while Boeing is catching up. In addition, a slow ramp up is anticipated for both Neo and MAX programs, which is around 2025 in our forecast. With regards to other OEMs, both Embraer and ATR have announced a reduction in their production plans and have yet to disclose the time at which their production rates will return to the pre-COVID level. However, Shanghai-based OEM Comac is projected to grow its production for its ARJ model, and by the end of 2021 or start of next year, the narrow-body C919 starts to get delivered to its first customer, China Eastern Airlines. As time goes on, the Chinese plane maker will surpass Embraer and will only trail behind the duplicate Airbus and Boeing. And if we take another view around aircraft utilization, we have observed the number of passenger flights which have recovered above 50% of the pre-COVID levels in March this year, with data support from IB's InsightIQ. And at the same time, over 60% of in-service fleet have become active in the same months. This is a massive resurgence from the darkest time back in April last year, when only 19% of flights at the pre-COVID was recorded in that month, and nearly 70% of the in-service fleet were grounded, which means either parked or stalled. Widebody has been the worst hit sector because the long-haul market has been severely damaged with the advent of the COVID outbreak. On the other hand, regional market has experienced way better traffic recovery so far. However, most European countries, apart from the UK, recently have entered a third wave as the new virus strain spread around the continent. On the upside, there will be more recovery expected in the domestic traffic in both US and China. Therefore, we will pretty much see a mixed picture as time goes on, and the number of flights tend to fluctuate as future is kept on hold. So despite all these negative outlooks, and we still have been living under this COVID climate, we are trying to search more lights at the end of the tunnel. However, if we lay out the historical RPK figure from early 1990s, the traffic demand have always come back from each crisis after a certain period of recovery time. For instance, after both the 9/11 and SARS period and the global financial crisis, the global RPKs returned to the pre-crisis level after several years. The scale and the impact of the COVID on the worldwide traffic is significantly more profound compared to previous economic downturns. Since we have recorded a 66% of global RPK decrease with a much higher reduction of 88% in international RPKs. However, we will eventually get there, and we have to. So the question right now we need to ask, and we are keeping asking ourselves, is when? The international body IATA forecasts the global recovery will approximately be reached by 2025. Both Airbus and Boeing have also made their estimates. So Boeing expects recovery will be between 2023 and 2025, while Boeing mentioned in its market forecast that a full recovery will be realized around 2024 and 2025. Therefore, if we set the year of 2024 and 2025 as our target for recovery, and we will be able to create an overall RPK trend, which is highlighted in the red dots line on the chart there, from 1990, before which was relatively flat. So the next question is whether or not the global RPK will catch up this overall trend with all those years being lost due to the COVID. Well, it depends on how we look at it. The answer might be yes, because regardless, we'll eventually get back to the pre-COVID levels as time goes on. But the answer would be no, as the actual RPK would always be evolved, hence the trend line will be adjusted accordingly. In other words, it is a moving target. By all means, we have to prepare ourselves since the virus is going to stay with us for a very long time, and the full recovery of the traffic demand will largely depend on several key factors. The most crucial element is probably the successful vaccine rollout and its availability for every single nation around the world. And only if the vaccine rate is above 70% in order to reach the herd immunity, we can start to open up our borders and gradually and tentatively embrace our free travels. So now I will go over some of the key takeaways and highlight a bit of summaries in this slide. So the net order are projected to regain the momentum in the next 4 to 5 years, and the cancelled orders, such as 737 MAX, especially during the COVID-19, will be reviewed in the future order books. And the new technology aircraft, such as A220, A321neo, and especially the XLR, and A350 family, 737 MAX, potentially there will be an MNA, which is a middle market aircraft from Boeing, and the 777X wide-body aircraft to be favored. And the Asia Pacific region will be main demand driver post-COVID, and followed by the North America and the Europe region due to its new startups, airlines, and some replacement orders for the retired aircraft. So retirements are projected to grow in the next 5 years. Over 50% of them going to be derived from the narrow-body aircraft. So there'll be some opportunities for the P2F conversion and some order replacement there. Approximately around 30 to 40% currently stored aircraft, and for those aged above 20 years by 2025, those aircraft will be more likely to retire in the next 5 years. The market value of the current generation aircraft, especially the early build ones, will face more pressure due to oversupply in the secondary market, and the more new technology aircraft are to be delivered at the post-COVID era. And aircraft delivery and traffic demand are both anticipated to resume to the pre-COVID level around 2024 and 2025. And just to remind you, we are using the data from our online data intelligence platform, InsightIQ, We are offering demonstrations, and you can register interest via the website. And if you would like to have a look at the system or just to find out more details, please also do get in touch if we can help you with anything that we have discussed today. So thank you and take care.